Welcome back, everybody. Today we're talking about a topic that's a little controversial around these parts, and that's technical analysis. And if you think people called me a trader and not an investor before, well, just wait. See, the reality is what you've heard about technical analysis is usually one of two things. One, fundamental investors say it's absolute nonsense and more like astrology than anything. Or two, traders will tell you that technical analysis is all that matters and looking at fundamentals is a waste of time. Now, like most things we try to learn about these days, both of these views at best lack context and at worst are completely wrong. So in this video, we're going to talk about why most investors say technical analysis is nonsense. And we'll look at actual examples that'll challenge ourselves to think a bit differently. And then break down 3 truths that we can use from it as investors. So let's go ahead and get started. So first up, why do people say technical analysis is nonsense? Well, a lot of it stems from the fact that some of the most famous investors in the world, like Warren Buffett, have preached that owning a stock is like owning a piece of a business and learning how to analyze it in that way. So we look at balance sheets, we look at cash flows, we look at our own kind of charts that give us confidence that we're buying a, quote, good business. And if you look at charts that show earnings per share growth or free cash flow per share growth along with the stock price, a lot of times they follow each other. So it seems like it checks out, and people simply say, well, you can't see any of that on a technical chart, so it can't possibly be relevant. Plus, we've been taught to look at businesses as value creators over time, in that good businesses do well, and then their stocks do well. And if you go on X, you'll find 8,000 examples of people that are calculating a, quote, intrinsic value in like 8,000 different ways. So it kind of begs the question, is it really the intrinsic value, or is it our own perceived value based on what we believe is important and valuation methods that we believe are credible? Because if 2 people calculate intrinsic value in different ways, which one is right? It's just something to think about if you haven't already. But the second reason people say technical analysis is nonsense is that we know the market moves based on actual news. So it can be macro news like the Fed cutting rates, or it could be war starting in part of the world that impacts certain companies the most, or it could be a product announcement or business result that the market doesn't expect. And we've all seen a stock skyrocket or tank because of all those things. And those things can't possibly be predicted on a price chart, right? Well, let's take a look at some charts and see. Now, first up, this is a basic comparison of Microsoft and Costco over the last 2 months or so, and it's on the daily chart. Now, obviously, there's differences in this chart, but in general, the pattern is the same. And the basic point I'm trying to make with this is that many times stocks just trade based on the general direction that the market's trading. And so you'll see a bunch of different stocks that all have similar patterns on a day-to-day basis. And it's not because there's a fundamental reason for every price move, it's just traders trading and moving with the market. So if the broader market overall is generally going up or going down, you're going to see a lot of stocks kind of trading in very similar ways. But next, stock prices do tend to get more predictable around moving averages. Now, here's Meta on their weekly chart, and in general, it's an uptrend. So anytime it gets close to that 20-week moving average, it tends to bounce back. Now, does every dip like that have meaning? Well, no, probably not. Or if we take a look at Uber, which is a stock that people are posting about constantly since it's down about 15% over the past month or so. And what we're hearing is that it's because of Tesla and the robo-taxis, it's because of Waymo, or whatever other companies are there to disrupt it. But if you just take a look at their monthly chart, it's trading at around their 20-month average. So you can imagine there's a high probability that it may bounce up from here just based on what the chart says, regardless of whatever's in the news. So yes, going from 85 to 62 in the span of 3 months is a lot, but it could simply be market activity for a stock that's relatively volatile. Next up, let's take a look at Google, which is another one that everyone's talking about a lot. The market's so irrational, it's so undervalued, it's because of perplexity and all this stuff. But if you just look at the monthly chart, Google's dip looks to be simply trading activity down from the recent high in June to around the 20-month average and now bouncing back up. So again, that's not to dismiss any fundamental headwinds that Google may have, but those are things that aren't going to happen or show up in 2 months or even 6 months. It's going to be a long-term thing that happens over time where most of the price action in between is simply noise. Just because the stock goes down isn't necessarily for a meaningful reason. Whether we like it or not, market noise can actually last over a few months or even years depending on what the stock is. But the issue is that we've been conditioned with the internet to try to find meaning every 30 seconds. Now, I know the first thing you might say is, look, these are all just lines on a chart. They don't actually mean anything. But we have to remember that this is a market, right? Like, not everyone in the market is a long-term value investor. You have people out there who are simply trading based on algorithms, people who are trading intraday, trying to make money on very short-term price movements. And so trying to assume that everyone thinks the way that we do in terms of what a company is worth, or if that's even their goal and process for making money, is just short-sighted. Because the reality is prices move for many different reasons, but it's clear that they do move at least in some way based on technical factors. I mean, you can simply see it in the charts. As stock prices hit moving average lines, they continue either up or down along with the trend for a while. Now, what people will do is they'll look at a chart and say, but look, here's an example of when it didn't follow the pattern. And of course, it's never going to be 100% predictive. And if you have some big unexpected news, then of course it's going to change. But the truth about technical analysis that no one tells you is that it absolutely has an impact on stock prices in the short to medium term. And I would argue that while long-term success of a stock versus the market is about fundamentals, most of the price movements in the market that people talk about are based mostly on technical factors, because it's about probabilities, and that's what a lot of people in the market who aren't focused on fundamentals are actually thinking about. There's some good things to learn about probabilities even for fundamental investors, which we're going to be talking about in my video next week, so make sure you don't miss that. Okay, so let's talk about 3 truths that we can take away from this information. Now, number 1, technicals do matter in the short to medium term, and arguably most trading days, because most trading days are noise if you're a long-term investor. It's algorithms and traders trading, moving stocks up and down as folks try to make money on shorter-term price movements. All the while, you have every blog or Twitter account trying to tell you exactly why the price changed. But for the most part, it's just noise if your time horizon is long-term. Now, number 2, fundamentals are still the most predictive indicator for most people. Now, let me explain what I mean here. A good company's stock should and will go up over time, and in general, the market tends to go up over time anyway, at least for the length of history that we've experienced so far. So for most people, looking at a stock like a business and trying to evaluate it to know if it's quality just kind of makes logical sense, and I think it's less emotionally charged than trying to look at a stock chart and guess what the price is going to do. But the reality that fundamental investors need to understand is that not every price move, even after earnings, means anything. So we should stop trying to assume that we know exactly why something happened unless there was truly a big news event that caused an unexpected movement in the chart. So it's simple. If you're a long-term investor, then think long-term and stop trying to make sense of every price move and every headline and just focus on the fundamentals every quarter and ignore the rest. And then lastly, number 3, you don't have to combine these methods at all if you don't want to, but it can be helpful if you do. For some people, they have no interest in this, and that's totally cool. Focus on your fundamental analysis, have a long-term view, and that's perfectly fine. But if you're a fundamental investor who's willing to take a look at a stock chart from time to time, you can use them to try to increase your probabilities of finding good entries on companies that you've already analyzed and vetted out. A great example of this for me was Cloudflare. I'd been interested in Cloudflare for a while. Their business, in my opinion, can be a big winner as it relates to the secular trend of edge computing, which I personally believe we're going to be talking about more and more over time, as the need for low latency AI inference use cases continues to increase. So that was one of the things that attracted me to the company, but as many of you pointed out, their valuation and things like stock-based compensation right now don't look great. But for me, those are secondary issues because I always prioritize the business aspect of the valuation over everything else, and to me, I like their potential there. Plus, when I looked at their chart, it looked like they were about to start an uptrend on the monthly chart, which they have. And just as another example, Twilio was a stock that I was looking at a few months back. I had it on my watch list, and they looked like they were about to break out on the monthly chart as well, and they have. So do we think this happened because people all of a sudden realized, hey, I really like Cloudflare and Twilio's business all of a sudden? Or is it more likely that traders trade and their charts looked really good and poised for a breakout, so they broke out? Well, I mean, there's no way to really know for sure. But in my experience, if you complement your fundamental analysis with just a glance at the stock's chart, it can help improve your entries, exits, and overall returns. So what you might be wondering is, well, if that's the case, why don't I actually talk about it more on this channel? And I actually used to in previous videos. I even had a couple of videos where I was talking about how to read a stock chart, and I would put it in my analysis like I did for Valero. And I even had a couple comments of people asking me why I didn't talk about it more. And well, it's just a little bit complicated because I think when people are starting out, it's easier to just focus too much on the charts and kind of skip the fundamental analysis because, it's harder, it's more ambiguous, it's not as clear, where the chart is right there in front of your face and you can kind of see whatever you want to see in it. So most of my videos, I just chose to focus on what I think is the most predictive way for folks to actually build wealth for themselves, and that's index funds and stocks based on fundamental analysis. But if you're experienced enough to augment that fundamental analysis with just a little bit of charting, it can do a lot of good. So let me know if you guys actually use technicals already, or if you still think it's just complete nonsense and why, down in the comments below. Now, if you want to see 3 tools that I use to pick better stocks in less time, you can go ahead and click on this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.